Hey guys, Assalamualaikum. My name is Muhammad Shazwan Bin Basiron, and today I'm going to share with you about peer-to-peer lending. What is peer-to-peer lending? Peer-to-peer lending or financing is a way for individuals or businesses to request funds from investors via a digital platform. The digital platform serves as the middleman or an intermediary between the requester and the investor. Multiple investors then contribute their funds towards a request made by an SME. It essentially connects SMEs seeking financing to investors seeking attractive returns. P2P lending has been introduced by the Securities Commission Malaysia in 2016 through platform operators registered by SCM, and through this, investors' opportunities to invest in high-growth business are now available. Micro and small-medium enterprise have access to financing, and capital could be used for expansion or for working capital. How does P2P work? Let's say Company A requests funds of Rm10,000 ringgit to grow their business. Company A raises this request via a P2P lending platform online and offers an investment opportunity to investors. An interested investor will then choose to lend his money to Company A. Next, we proceed to advantages of P2P lending for SME. 1. Lower interest rate. Compared to bank, P2P lending platforms often offer a lower interest rate due to lower origination fees. Second, high accessibility. Businesses that lack adequate track records or with poor credit rating often face difficulties when applying for a bank loan. P2P lending platforms make funding possible for businesses even without collateral. Third, convenient application process. While most of the banks require you to physically visit their branch for a loan application, you can easily apply for P2P funding online. Without the multi-layer bureaucratic process practiced in conventional banks, the approval process of P2P lending platforms is quicker as well. And last, flexible. Through P2P lending platforms, businesses can get their target amount approved as smaller funding needs can be met within a short period of time from multiple lenders. Next, disadvantages of P2P lending for SME. Number 1. Possible unsuccessful funding. Even if the application on a P2P lending platform gets approved, it does not guarantee the success of the funding. At least 80% of the target amount needs to be met within the funding period, or else it is considered a failure and has to be done all over again. And number 2, privacy exposure. To facilitate lenders in making funding decisions, most P2P lending platforms require public disclosure of your financial history, business plan, and other relevant information. Hence, pitching to many lenders means losing some anonymity of the business. Next, Islamic online P2P lending platform. The platform is operated with the Islamic Mudarabah trade model, differing from the credit models with interest in conventional banking. It is a joint venture between the capital owners and the entrepreneur who has a project need funding. In this model, the entrepreneur and the financial investor sign a commercial partnership agreement. According to the commercial agreement, the costs specified by the entrepreneur are met by the partnership of all investors who finance the project. The entrepreneur who receives the funding puts labor and knowledge in the project. The profit of the project is shared between the investor at a predetermined and agreed rate. In case of financial loss in the project, the investor covers the entire loss. Now, let's take a look at P2P financing operators available. Securities Commission Malaysia has introduced 6 registered peer-to-peer financing platform operators in Malaysia to widen funding avenue for small and medium enterprises. Among the operators are B2B Finpol, Atis Capital, Funded by Me Malaysia, Managed Pay Services, Modalku Ventures, and People Lender. So, as a conclusion, peer-to-peer or P2P lending marketplace have challenged the traditional banking financial services model. It is seen as Securities Commission Malaysia's digital agenda in support of the government's digital economy goal, which aims to improve access to capital, promote investor engagement, expand the institutional market, and create a synergistic financial technological system. That's all from me. Thank you and bye.